Many areas of Florida are on the verge of a housing market crash. But Jacksonville is thriving. Sales are steady, home prices holding firm, and inventory moving faster than in other Florida metros. This video centers on why Jacksonville stands out amid Florida's housing downturn. Statewide downturn signs. Florida's median single-family home price fell 3.5% year-over-year, from about $497K in June 2024 to $412K in June 2025. Inventory of homes for sale statewide surged by plus 124.2% in that period, a dramatic supply jump that's cooling prices. The time on market is lengthening, median 86 days to sell, 8 days longer than a year prior. Classic signs of a market losing steam. Jacksonville the outlier. By contrast, Jacksonville's prices did not crash. At the end of Q1 2025, Jacksonville's median sale price was $390,000. Unchanged, 0% growth from Q1 2024. That flat 0% change beat Tampa's 1.3% dip and outperformed the statewide decline. Jacksonville essentially broke even on prices when much of Florida saw losses. Thesis: how one city stayed strong. We'll explore the unique factors insulating Jacksonville: more affordable home prices, robust job growth, incoming waves of buyers, and other local advantages. Each section ahead will unpack these factors with hard numbers. Jacksonville's story proves that real estate is local. Even in a state-level slump, local conditions can defy the odds. Prices cooling statewide. Florida's housing heat has dissipated. The statewide median sale price, $413K, mid-2025, is down about 3.5% from a year prior, marking one of the first annual price declines since the post-2020 boom. Some once hot markets are even showing outright price drops. For example, Tampa, a Sunbelt star of the pandemic, saw a slight price decline, 1% YoY into 2025. Florida's overall home values are lower now than last year, a sharp reversal from the rapid run-ups of 2020-2022. Inventory surge. Buyer's market. A flood of listings is hitting Florida's market. Active for sale inventory jumped over plus 24% year-over-year. In fact, Florida now has more homes for sale than it did pre-pandemic, an unusual supply glut compared to most of the U.S. With demand no longer outpacing supply, many areas are tilting into buyer's market territory. Example: markets like Tampa, where prices surged during 2020-2022, now see inventory piling up, forcing sellers to cut prices or wait longer. Statewide, a balanced market is roughly 5 to 6 months of supply, and Florida's inventory spike is pushing conditions in that direction or beyond, easing the upward pressure on prices. Slower sales and more cancellations. As 2025 began, buyer activity cooled. The National Association of Realtors reported a 4.6% drop in pending home sales as of January, fewer contracts being signed, likely due to affordability strains. Some deals are falling through as financing gets tougher, and inspections, like insurance requirements, scare buyers off. Builders too have reacted. By mid-2025, 37% of home builders were cutting prices, and 2/3 were offering sales incentives to move units, the highest incentive rate in the post-pandemic period. These indicators show a market losing momentum, where home sellers can't assume a quick sale anymore. Skyrocketing insurance costs. One unique drag on Florida's market is the homeowners' insurance crisis. Insurers have been hiking premiums or exiting the state, making homes costlier to carry. Data shows Florida's effective home insurance rates jumped plus 154% between 2019 and 2024, a staggering increase driven largely by hurricane risk. Even nationally, premiums rose, charting to 24% from 2020-2024, but Florida's spike is much worse. Many Floridians now struggle to get affordable coverage. Some are forced into the state-backed Citizens Insurance Pool as private companies pull back. These soaring insurance bills, on top of high home prices and interest rates, are pricing out buyers and squeezing homeowners, further cooling demand. Affordability squeeze, rates and HOA fees. Mortgage rates hovering around 6-7% versus 3% a couple years ago have roughly doubled borrowing costs. A buyer taking a 30-year loan at 6.7% in mid-2025 faces a much higher monthly payment than in 2021, even if prices dipped slightly. Combined with Florida's higher property taxes, which rise as home values rose 50% over 5 years, and ubiquitous HOA fees in many communities, the monthly cost of owning in Florida has ballooned. Higher debt-to-income ratios mean some buyers simply can't qualify or afford a home at 2025 prices. This affordability crunch is a big reason demand has softened, setting the stage for price declines. Fear versus reality, crash or correction. All these factors, more inventory, fewer buyers, surging costs, sound ominous, hence the crash chatter. However, experts caution that a 2008-style crash is unlikely in 2025. Homeowners today have strong equity, and many own outright. In fact, a record number of homeowners are mortgage-free now, reducing forced sales. Unless we see a shock like 9% mortgage rates plus big job losses, deemed unlikely, Florida's 2025 housing market may be facing a moderate correction, not a total meltdown. Still, the contrast remains. Many Florida markets are in a slump, except Jacksonville, which we'll now examine in detail. In no price collapse in Jax. Unlike many Florida cities, Jacksonville hasn't seen a price free fall. As of Q1 2025, the median sale price in Jacksonville was $390,000, exactly the same as a year earlier, 0% change. Essentially, home values held steady year over year, a striking contrast to Florida's 3.5% dip statewide. In fact, among major Florida metros, Jacksonville was the only one not showing a decline. Tampa was down 1.3%, and even pricey Orlando was up a modest 2.3%, but Jacksonville stayed level. This stability indicates that demand in Jax kept up with supply, preventing any bust in prices. Solid sales activity. Homes are still selling well in Jacksonville. Realtors report that sales remain steady and homes continue to sell briskly in Jax, even as transactions slow elsewhere. Statewide, closed sales were roughly flat, 2.8% YOY, and Jacksonville appears to be matching that pace or better. There's little evidence of the kind of sales slump hitting other Florida markets. Buyers are out there in Jacksonville, keeping volumes healthy. Fast-moving inventory, one hallmark of Jacksonville's strength. Inventory moves faster here than in most Florida metros. That is, listed homes in Jacksonville spend less time on the market before being snapped up. Florida's median time to sale is 86 days, but Jacksonville likely beats that benchmark given local demand. This indicates balanced or even seller-favorable conditions persist in Jax, whereas many other areas are seeing listings linger. Quick turnover in Jacksonville reflects that buyer interest remains robust. Affordability and demand cushion. A big reason for Jacksonville's stable metrics is its relative affordability, detailed next section. Local agents note that Jacksonville is still very affordable compared to the rest of the state. This has kept demand resilient. People need homes and can actually buy in Jax without overstretching. While high prices in South Florida scared off buyers, Jacksonville's attainable prices kept buyers in play, preventing the sharp drops seen elsewhere. Summing up resilience. In short, by mid-2025, Jacksonville's housing market is strong, prices flat to slightly up, inventory in check, and sales chugging along. It's a clear outlier in Florida. The data screams one thing, no crash here. Next, we'll dig into why, exploring the unique factors, from home prices to jobs, that underpin this stability. Lower prices than rest of Florida. Housing in Jacksonville simply costs less than in Florida's other big cities. By mid-2025, the median home price in the Jacksonville metro was about $285,000, Zillow data. That's over $125K cheaper than Florida's statewide median. $3K. In Miami or West Palm Beach, many homes at that price would be out of reach. But Jacksonville offers them at a more reasonable price point. In short, Jacksonville homes are a bargain by Florida standards, which has been a major draw for buyers and a buffer against market collapse. Prices once lagged, now a benefit. Jacksonville was way behind the national average in terms of housing prices years ago. During the pandemic boom, prices did rise here, but not as sharply as in other Florida hotspots. For example, while Tampa or Miami saw double-digit surges, Jacksonville's growth was more moderate. Now that the frenzy is over, Jacksonville's smaller run-up means it doesn't have a massive bubble to burst. Its home values remain grounded in fundamentals like local incomes, rather than speculative excess. In effect, yesterday's relative underpricing has become today's strength. Jacks entered 2025 with room for prices to hold steady without a painful correction. Income alignment, manageable DTI. Housing is considered affordable when local incomes can support the prices. Jacksonville shines here. Median household income. $500 in the metro, and a median home price of $285K gives a price-to-income ratio around 3.9. That's far healthier than places like Miami, often 8x income or more. With 20% down at current rates, many Jacksonville buyers can keep their debt-to-income, DTI, within lender-friendly ranges. A family making $70K can realistically afford a median-priced home in Jacks, something not true in most of coastal Florida. This alignment of home prices to wages has kept demand stable. Locals aren't completely priced out like they are in pricier metros. Cost of living advantages. Beyond home prices, Jacksonville offers a gentler cost of living. Property taxes and insurance, while elevated statewide, hit a lower absolute dollar amount on a $285K house than a $500K house elsewhere. Jacksonville also has many neighborhoods without hefty HOA fees, or with modest ones, whereas South Florida's planned communities often tack on big HOA costs. And Florida's lack of state income tax, combined with Jacksonville's relatively lower local taxes, compared to big city Miami, means homeowners keep more income to put toward housing. These factors collectively make home ownership more attainable in Jacksonville, propping up its housing market. Drawing budget-conscious buyers. Jacksonville's affordability isn't just a local advantage, it's magnetizing buyers from elsewhere. Cost-conscious home shoppers who are priced out of South Florida's million-dollar markets see Jacksonville as a refuge of value. We'll see in the next section how this dynamic of attracting out-of-towners for financial reasons has injected Jacks with additional demand, reinforcing the price stability that affordability provides. Pandemic boom in newcomers. During 2020-2022, Jacksonville saw a surge of out-of-state buyers that hasn't fully abated. Buyers from New York, New Jersey, California, and Chicago poured in during the pandemic, drawn by Florida's sunshine and open spaces, and many chose Jacksonville for its blend of affordability and quality of life. These transplants often had cash or big equity after selling high-priced homes elsewhere, allowing them to comfortably buy in Jacks. The result was a wave of new demand that drove Jacksonville's housing market up, but not too far up, and left it with a larger base of residents going into 2023-2025, why Jacksonville attracts them. Experts attribute Jacksonville's resilience partly to this influx of newcomers seeking more space without leaving Florida. Jacksonville offers what migrating families want: relatively low crime rates, lower taxes, and a variety of neighborhoods, each with a unique vibe. Unlike South Florida's dense urban feel, Jacks provided a fresh alternative. Big yards, suburban communities, historic districts, beaches, at prices transplants found cheap. For someone selling a 1-200 SQFT townhouse in New Jersey or a bungalow in Los Angeles, a spacious Florida home in Jacksonville was a steal. This migration pipeline has kept Jacks's buyer pool replenished. Not as overheated. Sustainable. Those pandemic buyers did push up Jacksonville's prices. They surged during COVID, but not as sharply as in other Florida hotspots. So while places like Miami or Naples became frenzy markets dominated by investors, Jacksonville's influx was more end-user driven and at a manageable pace. Homes in Jacks sold quickly, continue to sell briskly in that period, but because starting prices were low, even incoming Californians didn't bid them into the stratosphere. The relative restraint during the boom means fewer buyers now have buyer's remorse or risky loans. And we aren't seeing a post-boom bust in Jacks. In-state migration. The Seminole Shuffle, it's not just Northerners. Floridians from pricier regions have their eyes on Jacksonville. As the housing market shifted, some buyers in Miami, Fort Lauderdale, or West Palm Beach decided to flee more expensive or crowded metro areas and head to Jacksonville. They realized they could sell a high-priced home downstate and buy more house for less money up in Jax. For example, a Miami family might sell a condo for $600K and purchase a Jacksonville suburban home for half that, pocketing the difference. Jacksonville's population of 977,000 has grown in part thanks to this domestic migration within Florida. These relocating Floridians further bolstered housing demand in Jax, even as South Florida started cooling. Net result: a demand safety net. By 2025, Jacksonville has effectively cultivated a broad buyer base. Long-time locals, out-of-state newcomers from both coasts and the Midwest, and intra-Florida movers. This diversity in demand means that even if one group pulls back, say fewer NYC transplants this year, others fill in. It's a key reason Jacksonville's inventory doesn't pile up. There's almost always someone ready to buy. In essence, population inflow provided a safety net under Jacksonville's housing market, catching any slack in local demand and keeping the market strong. Job market on fire. Jacksonville's job market is booming heading into 2025. Unemployment is under 5% locally, and companies are actively hiring. The city has become an economic hub. It's home to major corporate players like Ameris Bancorp, banking, and Black Knight Financial Services, mortgage tech, both headquartered in Jacksonville. Such headquarters bring thousands of stable, well-paying jobs to the area, directly feeding a base of potential homebuyers. In short, people have good jobs in Jacksonville, which means they can afford to buy homes and are less likely to leave, a critical foundation for a resilient housing market. Inward investment and relocations. Big businesses are betting on Jacksonville. A striking example. In 2019, Deutsche Bank moved 2,000-plus jobs from New York City to Jacksonville, specifically luring staff with a dramatically lower cost of living and affordable beachfront homes in Northeast Florida. This kind of corporate relocation not only adds immediate housing demand, all those employees need homes, but also signals confidence in Jacksonville's growth. Additionally, as companies relocate or expand in Jax, they often invest in local real estate, offices, facilities, and boost the overall economy. Jacksonville's ability to attract such moves, away from global cities like NYC, highlights its rising profile as a business-friendly, affordable metro. And that economic momentum translates into a robust housing market, billionaire backing and development. The optimism about Jacksonville's future isn't just on paper. It's visible in development projects. Shad Khan, the billionaire owner of the NFL's Jacksonville Jaguars, is literally investing in the city. His development firm, Iguana Investments, purchased a downtown luxury hotel for redevelopment, reflecting his faith in Jacksonville's growth. Likewise, upscale retailers, Louis Vuitton, Gucci, Restoration Hardware opened locations in Jax's St. John's Town Center during the early 2020s, indicating that high-end commerce sees a market here. Restoration. Hardware's massive $70,000 SQ15 gallery, opened 2021, was cited as a sign of the area's continuously strong housing market, since such stores follow affluent homeowner demand. These investments show that Jacksonville's economy and wealth base are expanding, a boon to housing. Diversified economy, steady demand. Unlike Florida markets reliant on tourism or retirees, Jacksonville's economy is broad. Finance, logistics, it's a major port city, military, naval stations nearby, healthcare, and more. This diversification provides stability. Even if one sector dips, others keep the region employed. More stable employment means fewer forced home sales and consistent buyer demand. For instance, even during national downturn fears, many Jacksonville workers in booming sectors like fintech or defense feel secure enough to buy homes. Additionally, a balanced economy attracts a variety of newcomers, as we saw. From young professionals to families, sustaining a healthy housing demand mix. In short, jobs and paychecks are fueling Jacksonville's housing, acting as a counterweight to the pressures hurting other Florida markets. Local confidence. The strong economy feeds a positive feedback loop in housing. Rising employment and new businesses create consumer confidence. People are optimistic about Jacksonville's future, so they're more willing to make big purchases like a home. That confidence is evident in Jacksonville remaining a hotspot, even as Florida's overall market looks dismal. It's easier to defy a housing downturn when your city is gaining jobs and residents. Jacksonville's economic vitality has given it the muscle to shrug off some of the housing slump that hit less fortunate Florida locales. No glut of unsold homes. Florida's overall inventory spiked, but Jacksonville's market stayed more balanced. We heard earlier that listings in Jacksonville tend to move quickly, often selling faster than in other metros. This suggests that Jacksonville doesn't have a large overhang of unsold homes languishing on the market, whereas some Florida cities saw a flood of new builds or spec homes that overshot demand. Jacksonville's supply increased more modestly. In fact, some regions of the U.S., Midwest, parts of Northeast, with limited overbuilding have fared better in 2025. Jacksonville fits this pattern within Florida. It didn't experience the same construction frenzy as Miami or Tampa during the boom, so it isn't dealing with a pileup now. Translation: fewer empty houses, less downward pressure on prices. Active buyers for active listings. When a home is listed in Jacksonville, chances are it sells. The combination of local and incoming buyers means demand has met supply. By late 2024 and 2025, Jacksonville had more for-sale inventory than a year prior, like the rest of Florida. But crucially, that inventory was met by willing buyers. This is reflected in metrics like month's supply of homes, staying in a healthy range. While statewide supply crept toward a buyer's market, Jacksonville's might still hover near a seller's market level. Essentially, Jacksonville did not see the huge mismatch of too many homes and not enough buyers. A key factor in avoiding a crash scenario. Submarkets holding value. It's important to note that not all Jacksonville real estate is uniform. Some submarkets are exceptionally strong. Many neighborhoods are holding value or even appreciating modestly in 2025. For instance, local agents say some of Jacksonville's hottest neighborhoods are extremely desirable for their affordability and schools. These areas continued to see competition among buyers. On the higher end, the luxury market, One Nami, has remained especially strong since COVID, with high-end buyers still active. Example: upscale coastal enclaves like Ponte Vedra Beach have managed to remain a hot real estate market, with demand for waterfront homes staying high. This variation means that even if a few areas softened, others picked up slack. Jacksonville's overall index is buoyed by these resilient pockets. Few distress signals. Another supply-related bright spot, distressed sales and cancellations have been minimal in Jacks. There hasn't been a wave of foreclosures. Or short sales. Homeowners generally have equity. Remember, many are mortgage-free or locked into low rates. So they aren't dumping homes at fire sale prices. Likewise, we're not hearing of mass contract cancellations in Jacksonville. Buyers who go under contract are following through, thanks to stable prices and insurance solutions. Local agents find ways to navigate the insurance hurdles that might torpedo deals elsewhere. All this indicates a market where supply is largely controlled by normal sellers and buyers, not panicked liquidations. That stability on the supply side helps Jacksonville avoid the cascading price drops of a crash. In new construction in check, builders in Jacksonville also seem to have kept their activity measured. While Texas and parts of Florida built huge volumes of new homes, leading to a glut of unsold new homes in some regions, Jacksonville's new construction was steady but not excessive. By 2025, builders in Northeast Florida adjusted quickly, offering incentives rather than flooding the market with spec builds. This means new home inventory isn't overwhelming the resale market. The result? Jacksonville's housing supply, both existing homes and new builds, remains in alignment with demand, preventing the free fall in prices seen when markets are oversupplied. Insurance sticker shock. Florida's spiraling home insurance premiums have hit Jacksonville homeowners along with everyone else. The cost of homeowners insurance skyrocketed over the past few years. Effective rates are up some 54% since 2019 on average. This means a Jacksonville family that paid $2,000 more for insurance a few years ago might pay over $3,000 now for the same house. Such jumps can price marginal buyers out. Higher insurance pushes up monthly escrow payments, affecting loan approvals. Jacksonville is somewhat fortunate geographically. Being in Northeast Florida, it's a bit less hurricane-prone than Miami or Tampa. But it's not exempt from statewide insurer pullbacks and rate hikes. The city has seen some insurers cancel policies or stop writing new ones, forcing homeowners to shop around or resort to Citizens, the state's insurer of last resort. Despite this, Jacksonville's market held up, suggesting that buyers and sellers found workarounds like adjusting prices slightly or buyers accepting higher costs to keep transactions flowing. Affordability still strained. While Jacksonville is affordable relative to South Florida, 2025 is not 2019, it's still a challenging market for some locals. Higher mortgage rates, around 6 to 7%, mean that even a $300K home costs much more per month now than when rates were 3%. Plus, as home values in Jacksonville did rise, about 0% to plus 0% year over year, essentially flat but up significantly from 2019 levels, some first-time buyers feel the squeeze. They must contend with not just the mortgage and insurance, but also property taxes, which rise as home values do, and HOA fees in certain neighborhoods. For example, many newer developments or condos in Jacksonville have HOA dues that can be a few $100s a month, an added cost buyers factor in. These costs collectively challenge affordability, even in Jax. Why no crash? Despite these, the question is, given these Florida-wide pressures, why didn't Jacksonville falter? The answers tie back to our previous sections: strong demand and economic fundamentals. Essentially, Jacksonville had enough cushion. Its prices were low enough and buyer interest high enough that even with a $1,000 jump in insurance or a higher interest rate, homes could still sell, perhaps at a slightly lower price, or to a cash buyer less affected by rates. Additionally, many Jacksonville buyers in 2025 have adjusted expectations, aiming for slightly smaller homes or different neighborhoods to stay within budget. And crucially, a significant share of purchases in Jacksonville may be all cash or high down payment deals, thanks to those relocators and well-paid professionals, which are less sensitive to interest rates. The fact that a record number of homeowners are mortgage-free nationally has its echo in Florida. Plenty of Jacksonville's home transactions involve equity-rich buyers or retirees paying cash. This blunts the effect of mortgage rate spikes on the market. Policy response and outlook. Florida's government and insurance regulators have been scrambling to address the insurance crisis, e.g., funding reinsurance, reforms to litigation. If successful, relief on insurance costs would directly benefit markets like Jacksonville by lowering ownership costs. Meanwhile, mortgage rates are expected to tick down slightly by late 2025. Fannie Mae forecasts 6.3% 30-year rates by year-end. Any improvement on these fronts will further ease affordability. The key point: Jacksonville navigated the worst of these challenges already. If they even moderately improve, Jacksonville's housing market could strengthen further. The city's resilience in the face of high insurance and rate headwinds shows how robust the underlying demand is. Historic and hip neighborhoods. Jacksonville offers attractive lifestyle neighborhoods that have stayed in demand. Take Avondale in Riverside, a walkable historic district with boutique shops, cafes, and parks. It's mentioned as a popular area with a unique vibe. Despite broader market cooldowns, Avondale and nearby Riverside continued to see strong interest. Homes there retained value due to their character and central location. Residents love the walkability and local amenities, features that always attract buyers, especially millennials and remote workers. These in-town neighborhoods illustrate that homes with unique appeal, historic charm, urban walkability in Jacksonville never really went out of style in 2025. Suburban family favorites on the affordability end. Several family-friendly neighborhoods in Jacksonville remained extremely desirable for their affordability and schools. Local realtor Tonya O'Quinn notes that some of the hottest neighborhoods are those that combine reasonable prices with good school districts. Areas like Mandarin, Julington Creek, or parts of Northside offer modern homes at prices middle-class families can manage, plus strong school zones. These saw continued demand. Even in a tougher market, families prioritize education and space. So they were still competing for homes in these neighborhoods, keeping prices from falling. This segment, the moderate-priced high-quality-of-life suburbs, formed a backbone of stable demand in Jacksonville. Luxury market resilience. Surprisingly, Jacksonville's luxury housing market, homes 1 million and up, has been on fire since 2020 and stayed hot. The high-end segment is described as especially strong since COVID, and even in 2025 remains resilient. For example, Ponte Vedra Beach, an upscale community in the Jacksonville area, managed to remain a hot real estate market thanks to its waterfront location and golf resort lifestyle. Multi-million-dollar properties in Ponte Vedra or coastal Jacksonville, like Atlantic Beach, are still drawing wealthy buyers, often cash buyers or executives moving in with companies. In fact, the influx of finance and tech jobs meant more high-income residents shopping for luxury homes, helping this segment defy the wider cooldown. The durability of the luxury segment means top-end sales and prices in Jacksonville did not crash. An important indicator, since high-end markets tend to crumble first in a true bust. Downtown and urban revival. Jacksonville's urban core also tells a positive story. Even as some cities' downtown condos struggled post-pandemic, residences in downtown Jacksonville managed to stay afloat as most of the Sunshine State is in a housing crisis. Downtown Jacksonville and adjacent areas, like the South Bank and Brooklyn neighborhood, have been seeing new apartments, condo projects, and renovations. The ongoing downtown revitalization, including projects by Shad Khan and others, has kept the city center housing market stable. Young professionals and empty nesters are drawn to the riverfront city life, providing a niche demand that held up in 2025. This is remarkable because in a crash, downtowns typically get hit hard. Jacksonville's did not, signaling underlying strength. Overall mosaic. From quaint historic streets to beachfront enclaves, Jacksonville's variety is part of its strength. Different neighborhoods cater to different buyer demographics, creating a diversified housing ecosystem. When interest dipped in one segment, another segment picked up. For instance, if rising rates slowed some first-time buyers, the cash-rich luxury buyers were still active. If a luxury sale took a bit longer, a mid-range family home might get multiple offers. This mosaic of micro-markets helped ensure no single shock could tank the whole city's prices. The takeaway. Jacksonville's housing market isn't one market, but many, and in 2025, most of those many markets were doing just fine or great. Summing up the defiance. Jacksonville in 2025 stood out as the exception in Florida. While the Sunshine State's housing market cooled dramatically, Jacksonville kept its groove. The numbers we've shared tell the story. Flat prices instead of declines, steady sales instead of slumps, and a market that remained fundamentally healthy even as others faltered. This was no accident. It was the result of affordable prices, continuous demand from newcomers, a robust local economy, and prudent levels of supply. Jacksonville effectively sidestepped the worst-case scenario that some feared for Florida's housing. Looking ahead, can Jacksonville stay strong? The outlook is positive. Experts aren't predicting any Florida-wide crash in 2025, and Jacksonville is even better positioned than most markets. If mortgage rates ease a bit and insurance issues are addressed, pent-up demand could even drive Jacksonville home values up slightly. As one real estate forecast put it, 2025 is shaping up to be a great time to buy in Florida for those who are ready. And Jacksonville buyers especially can do so without the fear of catching a falling knife. For sellers in Jacksonville, the market may not be as frenzied as 2021, but it's far from a meltdown. Well-priced homes will find eager buyers. The Jacksonville lesson. In a broader sense, Jacksonville's 2025 experience is a case study in resilience. It shows that fundamentals matter. Cities with solid job growth, affordable housing, and population gains can weather a housing slowdown much better. Local conditions trump national headlines. So, while parts of Florida brace for a rough ride, Jacksonville's housing market in 2025 is the one that bucked the trend. A hopeful sign that not every city's fate is sealed by a statewide crash. Jacksonville kept its housing momentum going, proving that even in a challenging year, there's strength in the right mix of factors. And that is how one city stayed strong.